but my name is Carolyn Keller, and I'm the founder of Curio 412. We're an impact management consultancy, and we work with nonprofits as well as businesses to help plan, organize, and implement charitable initiatives. And we started these next step sessions, gosh, a little over a year ago now, to really respond to COVID and keep people up to date with what was going on in a number of different ways, whether that was fundraising, financial management. And as we've continued, we've listened to many of the people who have attended these sessions in the past and come up with a number of different topics, insurance being one of them. And so today, if you are joining us now, typically we do a format where we have a brief presentation, but then we go into Q&A, and it's very much an opportunity to share with your colleagues and learn from your colleagues. We record the first half, but not the second half, just for privacy issues and making sure that you are able to express any concerns that you have very openly. But while we get started, if you'd like to go ahead and type your name and where you're from in the chat, love to see who's with us today. And I'm going to turn it over to Yvonne to introduce himself and tell us a little bit more about navigating nonprofit insurance.
Thank you very much, Caroline. I will go ahead and share my screen here. Give me 1 second. Okay. Can everybody see? Everybody see the screen in my slides or no?
Yes.
We see your screen.
Not slides now.
There's slides, yep.
Here we go. Yeah, it's just the screens do flip on me. But give me 1 second, and we'll begin. All right. Well, thanks everybody for being here with us. As Carolyn may have mentioned, my name is Ivan Usero. I'm with USI Insurance, and we're going to talk about navigating the complex, interesting, and exciting world of nonprofit insurance. I serve on the board of a nonprofit myself. It's definitely a topic that is more relevant, specifically these days. With you've seen. The breaches and the situations that have happened, but just a quick agenda for us today. We'll just talk about a little bit about who USI is, the broker that I work for. We'll talk about community and people. Then we'll get into some coverage considerations, some examples of maybe some scenarios that you could have may have thought of or may not have thought of, and then we'll talk a little bit more about questions and answers at the end, if that's okay with you guys. All right, so in terms of the basic, excuse me, sorry about that. In terms of USI, we are one of the largest national brokers in the country, privately held brokers in the country, approaching $2.5 billion in revenue. Our region has about 510 professionals, 6,000 across the country in property and casualty. We are very focused on commercial property casualty, employee benefits, personal risk programs, retirement consulting, presence in all 50 states. Bigger is not always better, is what I say, but we're very much involved in the community. We try to out local the locals and out national the nationals. The reason why I joined USI about 2.5 years ago or so was, the focus on community and people. Everything that they have said in terms of getting involved with diversity and inclusion, with volunteering, with the community, with green initiatives, they've stuck to it since day one. It gives me a lot of pride to be able to work with a large organization that is very flat and still contributes to the community. They've been very helpful to us at the chamber as well. But getting into, just the basic and lines of insurance that should be considered that a nonprofit should definitely have. We can start with general liability. I'm sure that you guys have possibly run into this before. You may have seen it. Typically, you see general liability insurance limits of $1 million per occurrence and $2 million in the aggregate. what does that mean? So that basically means that a policy, should there be a claim situation, a policy would cover $1 million per claim, and up to 2 million, for the length of the policy term. Within that, you see several different sublimits for advertising injury, for completed products operations, for damage to premises rented to you. Those are all included within general liability. Many times, I run into what we call, off-the-shelf policies. These are policies that, may contain, immediate exclusions that are going to severely limit coverage. Specifically, these may apply, and an organization may have these when they start out. If they aren't checked year by year as an organization grows, there could be some exclusions that would limit coverage over time. And typically, the cost of a general liability policy is driven by revenue. It can be driven by square footage if we're talking about a real estate risk, and it also can be driven by payroll depending on the type of organization that it is. So very important that we take into consideration classification review. Many times I run into organizations who are misclassified, and guess what happens? They're either being charged more premium than they should, or sometimes they're misclassified and they're paying a lot less. Important that whomever at the organization is dealing with the insurance, that they be on top of the classification to avoid increases of 10 to 30%, in premiums. Many organizations do have affiliations and contracts with other organizations, so it's important that coverage align, with these contracts. Basically, something that I do is constantly revise these contracts to ensure the structure, aligns, and that there are no claims that would be left unpaid. Moving forward to workers' compensation. You guys may have heard of this as well. This is the part of coverage that would cover any employees, any full-time staff from injury, or from getting sick at work. Yes, there have been many claims in terms of workers' compensation as of late due to COVID, and COVID is a covered exposure in terms of workers' comp. These policies are usually driven by payroll. Very important that organizations design an efficient workers' comp program. The larger the organization, the more options they would have, right? Of course, very important to take into consideration all states of operation. Some states are what we call monopolistic. For example, Ohio. In Ohio, you can only purchase workers' compensation from the state directly. So multi-state organizations need to be mindful of all the states that they're working in, so coverage is appropriate. Payroll needs to be allocated accordingly. Okay, and moving on to directors and officers liability, very important for us in the nonprofit space, because that's going to cover the board and everybody on it from being sued personally. Side A of directors and officers coverage is personal asset protection. Also very important that a policy not be limited on defense cost. Some directors and officers policy language has changed because of recent litigation, because of recent claims activity, and they have limited defense costs in some regard, but that's within the policy language. Whoever your broker is needs to be paying attention to all of that, of course. But let me keep on moving here. USI, we have a pre-negotiated exclusive endorsement pack that would, take out ambiguous policy language and remove uncertainty to ensure that maximum recovery in terms of if there ever is a claim. Within directors and officers and management lines liability, we often talk about employment practices liability. This is coverage designed to protect against wrongful acts resulting from termination, harassment, retaliation, or for hiring practices. In the era of the Me Too movement, it is very important that this be that this be a strong coverage, that language not be exclusionary. And this is just another example here of how a broker should be able to optimize language where sexual harassment is not excluded, and a claim could be potentially unpaid. The average claim for a small business, back in 2019 was 160,000 when it came to EPLI. And the average cost for a larger enterprise was 350,000 back in 2019. So very important that those limits be sufficient. So this is covered. Then moving on to auto liability, pretty straightforward. If the organization has vehicles, of course, they're going to need to have this type of coverage in place. Where it could get a little ambiguous is when we talk about hired non-owned auto coverage. So this coverage usually is extended to vehicles not owned by the business that are driven by either employees. This can be extended to volunteers also. Typically, this coverage is liability only and would be in excess of a person's personal policy, but these policies can be amended to include third-party physical damage, which is also important, and very important when there's lots of volunteers that they be included in coverage as well. Now, if your organization does engage in the transportation of patients or employees or volunteers, it's also very important that that the hired non-owned auto be amended, because any kind of livery operations or taking people to and from basically would automatically be excluded if not amended. Now, one of the important hot buttons right now, of course, is cyber liability. I'm sure you've seen, all the claims and all the cyber attacks that have happened. It's probably wasn't a hot topic, something that we didn't really talk about, 2 or 3 years ago, but now it is essentially what gets the conversation going in a lot of ways. An organization must take into account cyber breach exposure, hacking, social engineering, cyber extortion. Pretty much all of those aspects could be causing sufficient claims in the future. I have listed examples, and I'll send this out to everybody, or I'll make sure Carolyn gets this presentation out to everybody. But network security, privacy liability coverage has to be in there. Coverage for extortion and ransomware. Important to note that ransomware incidents were up, 25% in the first quarter of last year. I'm sure you saw the big cyber hack that happened to the big oil pipeline. The average malware attack pretty much in 2019 was around $780,000. So, gone are really the days that only large organizations are targeted. We see smaller organizations being targeted more and more and being taken for ransom more and more. Just here's examples of phishing and fraud losses as well. And the good thing is, in working with a large broker like USI, we have the capabilities to put together a mitigation and loss control plan, and we have the ability to evaluate each organization individually to ensure that those potential losses are minimized. And we also have a proprietary program that nobody else has access to called PrivaSafe, where depending on the size of the organization, it can provide 20 plus pre-negotiated coverage enhancements of basically limits between 100,000 up to 10 million. But just a little bit more information about me. I work in the select practice here in property casualty in USI, the Mid-Atlantic region. I'm licensed in 29 states, so if organizations do cross into West Virginia, New York, into any other state, I can definitely work with you guys. I serve as the president of the Hispanic Chamber. I'm very connected to the community. I very much am passionate about helping nonprofits. So if I could ever consult with any of you guys, definitely let me know. It's my goal to, do as much as I can on the risk management insurance side so organizations can better achieve their mission. Now, yes, moving forward, we can, I guess, start with a few questions. My contact info is there, but if anybody has any questions, I'm definitely all ears.
Thanks, Yvonne. Before we stop the recording, I have a couple of questions for you that
Yes,
might be relevant to everyone. So,
sure.
and I've worked with a number of nonprofits. They range in size. Would you say, when nonprofits are asking questions about liabilities and thinking
Mhm.
about insurance, how big does a nonprofit need to be before it needs certain types of insurance? You covered, general liability, directors, auto, a few different kinds. When do those come into play?
I would say, just using the Hispanic Chamber, for example, when you start having fundraising events, when you start handling money, when you start delegating different tasks to a board, even if not formal, I would say that's really when you should start thinking about at least getting a small directors and officers policy along with general liability. A general liability policy can be amended to cover all events, or when somebody starts off very small and just may need coverage for 1 or 2 times a year, they can get an individual events policy. But I say, as soon as you formalize, as soon as you put any bylaws in place, I'd say it's time to start thinking about coverage.
Awesome. And what are some of the biggest claims that you see as being problematic for nonprofits and small businesses based on your experience?
Well, you know, they vary, of course, but lately, just to give you an example, the nonprofit I met with this morning, is dealing with a complicated situation where they have someone who is vehemently opposed to to the um, the organization, and any event that this organization participates in, this person shows up to protest. So it wasn't at their particular event, but it was another organization's event. This person shows up, caused a scene, caused havoc, had to be removed from the premises by the police. And basically it's the directors and officers claim that they're going through now. It probably will not go anywhere, but claims can vary from, directors and officers. I would say, harassment they have happened often. Property damage, should you be at a location and someone cause damage at an event. I say they can vary across the board, but those are more the ones that I'm seeing, along with increased cyber claims.
Thanks. And when you work with nonprofits, what sticks out to you as being unique to nonprofits in the area of insurance as opposed to, say, small business or other corporate entities?
Well, I would say depending on what the nonprofit is doing, that's really how you're going to approach and customize the insurance program. Of course, more so than say a contracting business. I would say that the management lines are going to be more important, and by management lines I mean employment practices liability, directors and officers, fiduciary liability if that is something that the organization is involved with. It's going to be more I'd say the people side of coverages rather than the physical side.
Yes. And when you talk about all of the different types of um, things that can happen within an organization, what would you say is the biggest cost for a nonprofit not to have insurance, especially when it comes to things like general liability or directors and officers?
Well, I would say that, litigation is going to always be the biggest concern, because anybody can sue anyone for anything these days. That's what happens. And if an organization does not have, say, does not have a directors and officers policy, those defense costs can add up pretty quickly. They can be in the hundreds of thousands of dollars. So, directors and officers for a small organization can be obtained for, like an example, we just renewed ours at the chamber. It's $800 a year. Well worth having the $800 a year spend versus hundreds of thousands in court costs and defense costs.
Right, no, for sure. I've seen situations get ugly before. I've never had anyone in a situation of being sued, but that's not something that any organization wants to go through. So,
No, definitely.
well, I'm going to go ahead and stop the recording and open it up for questions from everyone else. I have a few questions that came up through registration, but I'd love to hear what thoughts everyone has from listening to your presentations, maybe more specific questions about what's going on at your institutions, and some of your biggest liability concerns.